everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today, we're taking a look at the S&P 500. Now, the S&P 500 overall had a pretty good morning so far. It started off a little bit rocky, a little bit kind of gross, without a whole lot of movement going on, but we started getting a little bit of a breakout to the upside, and that includes all of the indices. We actually had another really nice trade on the EMD that allowed for another good jump. But looking at the S&P yesterday, we had like we were talking about in the Outlook newsletter, we were talking about how this was just a picture perfect, beautiful bearish trend on the way down, and it's really hard to find something that looks much better than that, right? We open up gap up though. So all of the bears who were in from yesterday, well, they're not feeling so great anymore, right? We closed the day yesterday after one of those textbook perfect bearish channels, and then we open up with a gap higher? Wait a minute, something's up, right? Well, again, if we zoom out, we can see that the buyers have been attempting control off of that major support level that we were watching on the larger time frames, and they didn't let go of it yesterday either. We gapped up away from that, showing a strong bullish sentiment. So even though yesterday was a beautiful bearish turn, today it makes a lot of sense to see that gap higher in continuation. Now, you got to be a little bit careful. You don't want to be early to the party, right? You never want to be early to the party. You want to wait for the buyers to show up and prove that they are actually going to take over. Started off the day with a little bit of a rocky start, kind of back and forth, and just sort of ugly overall. We had a move up and then down and then up and then down, and then we broke away. Quite a different move compared to what we've seen so far that morning. We had a strong bull bar, another bull bar, and then another bull bar back to back after three that we did have back here. But look at the difference, right? These bull bars are all closing very near their highs, except the final one, and this one still closed above the prior candle's high. So we're getting good bullish continuation. In comparison, we have this one right here, nice bearish, terrible looking bear bar, another bear bar that had the exact same low as the previous. It's just not that consistent. So the sellers really don't have a whole lot of emphasis, and the buyers are beginning to gain their emphasis here. So we get a breakout of the upside, and we start pulling back. Now this pullback, very weak, just about as weak as we had on this first bear move back here, and that allowed for one of our pattern setups, a TSS long, back to the upside for a beautiful move right back up. Now the TSS setup really kind of kicked off the start of this move. It triggered off of a doji, but once again, look at the consistency of the buyers. They're back to back to back over and over, closing above the prior candle's highs, closing near the candle's highs. We're showing good conviction from the buy side. Although very small in size, those candles, there's still a lot of information to be learned from them, right? So we start getting a little bit of a pullback, beautiful bear candle pullback. Last time we had one of those was nothing but a trap, so we're anticipating the exact same thing here. Sure enough, triggers down, immediately fires right back up and closes on the high side bull, and that allows the buyers to jump on back in, looking for another move back through the highs, or really to actually finish off the move through the highs to get it going. We get one more attempt from the bears, and this is one of those interesting ones that you don't get to see very often. If we zoom in really close, what do we know? Well, the sellers likely sold this candle, right? So their entry is one tick underneath that candle. As soon as they see the very next candle, now they feel like they got screwed, right? They feel like they got screwed, and they're like, oh, wait a minute, this is a terrible bar. The market's going higher. Why am I selling? Just get me out, right? So they try to put their order at break even. The market comes all the way down one tick away from their break even point, right? Misses them by one tick, and then starts turning back up and closes like this. So the psychological aspect of this is massive amounts of fear. The sellers realize they're wrong. They tried to get out at break even. The market wouldn't let them get out at break even. Now they're running with their tail between their legs, and they're forced to close the market, or close at the market, which causes the next buy move up and a big rally through the top. So that's really why I like that next follow-up buy there, because in context, you have sellers running for the hills when that candle shows up, and that allows you to catch a nice fast move right back up again. Same exact thing happens here, but not as much of a trap anymore. This is more likely buyers taking profit. Not only are the sellers that have been stopped out now realizing, wait a minute, I need a pullback, so they're trying to buy in on anything they can get, but you also have buyers that are looking to take profit. We're above the high a day. We're around a possible channel top area, wedge top area, so you're going to get some profit taking. And you get a little bit of a pullback. Candle closes right back up near its highs. If it would have gone one more tick up, that would have been a massively bullish candle. But instead, said, it's still a very bullish candle, but it closed bearish, and that allows a breakout buy above to continue that momentum back higher. Now, once again, we're in another area where, hey, this could be the top of a wedge, right? So if this is the top of a wedge, we should start seeing some more profit taking. And we do. A little bit of bearishness, a little bit of weak bullishness, and then we break out above this as well. Now we're getting irrational, right? When you get irrational, you are in pure breakout mode, and the market is very unlikely to stop over the next several candles before realizing, whoa, wait a minute, we're a little expensive up here. Maybe we need to hit the brakes a little bit. And that allows for a breakout buy to finish off the morning session, and just a beautiful morning session, and lots of psychological aspects of this, with the sellers getting trapped, playing their stops, kind of playing with their stops against them, unfortunately for them if they were short. But just a great example of looking inside the candles and realizing what's happening, and noting what the psychology is. What are they going to be doing? If you're looking to get out of break even, you know you're wrong. You're just hoping the market gives you a break even. Comes one tick away from your break even, and then boom, runs away. There's no way they're going to stick in that. And that allowed for some really nice momentum to the upside. So great learning experience today. Hopefully you learned something. Hopefully you found it useful, maybe a little entertaining, and we'll see you next time.